What's going on, guys? In this video, I want to go over the macro technical analysis on the Nasdaq 100. Something that we need to kind of keep in mind. As we've started 2025, there's one thing that's kind of it's sticking out to me, and it's very, very apparent now. I know a lot of us are scalpers, a lot of us are short-term traders where we're going to take 3 points, 5 points, 10 points, but we have to kind of take a look at the whole picture here. On the right-hand side of the screen, we're looking at the daily chart. On the left-hand side of the screen, we're looking at the 1-hour chart, okay? Let's focus on the right-hand side of my screen. That daily chart is what is starting to be alarming to me. Every night, I analyze equities, analyze different stocks for potential moves in the market from a top-down approach. Things I'm looking to maybe put swing trades on, things I'm looking to day trade into tomorrow. Now, when I'm doing my chart work tonight, one thing is becoming very, very evident here on this NASDAQ daily chart. We are putting in lower highs, okay? And anytime you start to put in these lower highs, so if I was to look at this here, starting from the top, okay? There's a high, here's a high, right? And here's a high, okay? So not only are we putting in these lower highs, right? We're staircasing down. So the drops in the market, like we've seen and experienced today is the 7th, those can become more prominent, faster, more violent, more frequency in terms of price action on a day-to-day basis when we're trading on a staircase down. Now, two things are standing out to me. 2 days back-to-back, 2 back-to-back trading days, January 6th, January 7th. We got over and we had plenty of opportunity to close over this 20-day moving average. This is very significant, okay? I know you guys are familiar with the 20 play, using it as scalping, but when you're looking at this from a top-down view, from a daily chart, being under the 20-day moving average is not what the bulls want to see, okay? We're below the 5-day moving average today. We're below the 10-day moving average. Let me explain something to you guys on macro technical analysis. When you're trading over the 5-day moving average, that's kind of telling you who has control of the next day, right? The next day. When you're trading over the 10-day moving average, typically that's in control of the week. Typically, when you're trading over under the 20-day moving average, that's who's in control of the month. Okay, the bi-weekly, monthly period, who's in control of the 50-day moving average can definitely be a telltale sign of who's going to be in control of the quarter. Okay, now that doesn't mean that if we're trading below the 20-day moving average, you're never going to have a green day. You're never going to have a green up move. But what I'm saying is bounces, pops in the market can get easily pulled much, much quicker. Okay, much quicker. So you need to be careful. I would approach, until we reclaim the 20-day moving average on a daily time frame, I would definitely approach any long potential, whether it's a 20 play, whether it's an opening drive, whether it's a bounce play, a reversion pivot, whether it's a 15-minute opening range, a 30-minute opening range, any play that you have that is telling you to go long, I need you guys to be careful. What I would do, size down. Okay, automatically these longs are going to automatically get the size down red flag. Okay, so we're going to size down. If you normally trade one mini contract, I would trade 5-6 micro contracts long. If you normally trade 5 micros, I would trade no more than 3 micros long. If you normally trade 3 micros, I would trade 1 micro long. Plain and simple. We have to take the risk down when we're going long underneath the 20-day moving average, underneath the short-term moving averages, 5-10-day moving averages. This is standing out to me. 2 days we were over the 20 SMA. 2 days back to back. The market and the bulls, the buyers, they could not hold this and they could not build on it. If you look back here to December the 26th, look at this holiday week here. We already had a 1, 2, 3, 4, 5-day pullback. This first pullback pulled into the 50 SMA. If you know anything about moving averages and technical analysis, you know that the 50-day moving average is very significant. It's second in significance next to the 200 and closely after the 200 is the 20. Those three moving averages are very significant when it comes to a daily chart. So if you look at this chart, we already had a 5-day pullback. We already had a 2-day dead cat bounce. Now this bounce, this pullback was enough for the bulls to say, okay, you know, we can pull back off highs here a little bit. We're resting. There's a little bit of profit taking. It's the end of the year, so forth and so forth. But this bounce here that we've had the last, 3 days, from the 3rd, the 6th, and today at one point in time, we were trading over this 20-day moving average. We were over the 20-day moving average. We had all the time in the world to prove that we are going to continue to trend up higher, okay? And if we were to continue to close higher and get over January 6th's highs, we would then be targeting, 22,100, right? This swing high would be the next target. Anything over that, we're looking at 22,300, okay? This is not good, okay? I'm just going to be completely honest. Now, what does that mean, right? Go short off the open? No. Guys, here's how it's going to work. If we gap up tomorrow, you guys can notice right now, it's 6:40, 6:30 in the afternoon here, or nighttime in California, 9:30 Eastern. We are already up 50 points. This is not what you want to see when you are below supply, okay? If we continue to bounce in the overnight session and you get to pre-market and we're up 100 points or we're up 125, be cautious. They will trap those longs early and they will reverse you. Look over to the left of my screen. The left of my screen, this is the 1-hour chart from today. Look at what happened. This setup, pre-market, had a flat top. Okay, this pre-market had a flat top. Off the open, we popped that flat top. Okay, this had all the opportunity in the world to continue to break out to the long side, which if you look at the daily chart, we had a lot of opportunity. Notice my chart. Notice the 200, notice the 100, notice the linear regression, notice the 100 EMA, the 50 SMA, 50 EMA. Notice all of this stuff below us. This is all support. Notice how there's nothing in this range until you get to the top linear regression and Bollinger Band. There's nothing here but open airspace. Air and opportunity is the only thing that is up here, okay? So this morning, we had every opportunity to pop this back test and go. This downwards move could have easily been all green candles, and it should have. Okay, it should have. So when you get down to it, 2 days that have been rejected, we are staircasing our way down. Next potential stop could be here at 21,200. That's the 50-day moving average. That's going to be a telltale sign. Now, again, like I said, let's just make this very clear. If we gap up tomorrow, meaning, you come to the markets and we're up 100 points, 150 points, look out. Those longs will get trapped. You have supply at 21,500. If you open up anywhere close to 21,500, this could be a trap. You could be buying right into a trap. Now, does that mean that you can't go long? No, but you need to be cautious. What are we going to do? We're going to size down automatically. Number two, what are we going to do? If the trade doesn't work in our favor for a scalp quickly, we're out of the trade. We're not even going to give it time to mess around. Okay. In terms of take profits, for me, 3 points, 5 points, that's it. Okay, I'm not reaching for 10 points. I'm not reaching for 15 points to the long side. I'm looking to make a cup of coffee, and I'm looking to catch the continuation to the downside. I would love for this to pop to 21,500. Hell, I would love for this to pop to 21,600. This is more of an opportunity for me to get short off of legitimate setups here in this range. I want to short into supply being under this supply zone, okay? Underneath the 20-day moving average and the 10-day moving average on a daily time frame, I want to short at supply. I don't want to buy breakouts. We are not buying breakouts underneath supply, guys. Technical analysis 101. You cannot buy breakouts underneath supply. Today, when we opened up, we were over supply, meaning over the 20, 10, 5, 50-day moving average. We could have easily broken out today. We buy breakouts when we're above supply. When we're below supply, we do not buy breakouts. We short breakouts. If it breaks out, you short that back down until we reclaim that on a daily perspective. Your bigger short here is going to be, if we do lose today's lows, 21,279, we're going to be targeting a price of 21,200. Okay, so that's 70 points worth of downside there. This is going to be an easy trade below today's low. Any closure, I'm going to leave you guys with this, any closure below the 50-day moving average is not good at all for the first month of the year. There is a lot of room down below this 50-day moving average. First pit stop being 20,983. Second pit stop being all the way down here at 20,600. That would be upwards of 700 points to the downside that this market could be looking at within the next week to 2 weeks if they do not get buyers in gear. Okay, if we do not get the buyers' asses in gear, we could be looking at a 700 to 800 point decline over the next 1 to 2 weeks here in January. Okay, it will be aggressive, it will be quick. Notice every drop off the bounce, there's a new low. Off the bounce, there could be a new low. Okay, drop, dead cat bounce, still under previous swing high. Drop, new low, dead cat bounce, still underneath previous supply. Drop, bounce, new low. This market could be getting ready to go into a period of pause, especially as we have President Trump taking office this month as well. There's a lot of things going on in the world that need to be kind of monitored on a close basis. Now, again, I know I don't make a lot of these macro technical analysis videos, but it's something that you guys need to do on a day in and day out basis. If you guys are not personally doing this nightly, you're doing yourself a disservice. Again, I know we're scalpers. And again, I'm not saying that I care if the market goes down or it goes higher. I'm a day trader. I'll make money short. I will make money long. But I want to make sure that I'm sizing myself correctly in proper market conditions. These market conditions that we are in here are a little bit more bearish. They're leaning a little bit more bearish. Okay, so even if you look at the 1 hour chart on the left hand side of the screen, we have supply at 21,450, supply at 21,485. This could be a dead cat bounce, get rejected to come down this way. Okay, notice how much supply we have ahead. This market cannot break out until it gets oversupply. This market cannot just scream all the way back to all-time highs without closing over supply. So keep that in mind. Just wanted to drop this video for you guys. Have a better outlook. Again, scalps are tomorrow, any long setup. I'm not saying that you can't take the longs. I will still participate in the longs, but my mindset shifts to I'm cutting size down on any long position. I am cutting my take profits down on any long position. 3 points, 5 points, that's it. I'll wait for better opportunities. Any short position goes back to my normal position size. I will look for 5 to 10 points on my scalps, and I will play the shorts a little bit more aggressive. Hope this video helps you guys.